Okay, and so welcome back to the last video of Chapter 6. We're going to talk about petty cash and the change fund. So petty cash is a small account, but really it's maybe more likely an envelope or something where you keep a small amount of cash on hand so that you can cover some day-to-day expenses. So it's an account in that it is an actual account on our books, and we are going to recognize it and record it, and we just don't say, that's miscellaneous, and, write it off. We do have it journalize and post those accounts, but it may be, an envelope of cash, $40, $50, $60, I don't know, that we keep on hand just for those emergencies. So when we create a petty cash fund, petty cash is an asset account. So typically we'll move cash out of our checking account, out of our cash account, into petty cash. So to create the account, we will do a journal entry to debit petty cash and credit cash. So here we see our account. We're going to debit petty cash and credit cash for $60. So we went to the bank, we withdrew $60, and then our journal entry was to put that in our petty cash envelope. So petty cash account will be debited or credited if we decide to change the size of account. If we decide, hey, we don't need this much money or we need more money. We also need to use vouchers or, a little note when we take money from the fund. So we need to record, hey, I gave $10 to Susan to run to, the grocery store and get cinnamon rolls for everybody's birthday or whatever, okay? So we need to fill that out, put who we gave the money to, what the date, what it was for, that kind of stuff. We need to have those sequentially numbered. You can easily buy a voucher book at, a Staples or an Office Max or somewhere, something like that, so you can keep track of those, that they're numbered. We know always what we did. Usually they're in duplicate, so we can have a copy of it. So the vouchers on hand plus the cash should total up the size of our fund. So in our case, the vouchers plus the cash on hand should total to $60. So the petty cash voucher is going to have, again, a voucher number. It should be numbered. We're going to put the date. We're going to put down who we gave the money to, how much we gave them, what reason we gave them for. We should have, the custodian, the accountant, the bookkeeper should be signing that they approved this. The person who took the money should sign that they received it. And then we're going to put a note on there for, again, the accountant or the bookkeeper or whoever that says this is the account that should be charged. Okay. Because here's an example petty cash voucher. So we gave $3 to Al's Cleaning for a cleaning package, and we've got that numbered of 619, and so we know exactly what it's for. So at the end of the month, usually, we're going to take all of those vouchers, we'll take them to the accountant or the bookkeeper, and the accountant or the bookkeeper will do the journal entries to record those in our books and then replenish the petty cash fund. So here we can see at the end of May, we had used petty cash for cleaning, for postage stamp, for some first aid supplies, for some delivery expenses, maybe those were tips we gave in cash, and then again, more postage stamps. So here's our record where you can see we've recorded these in our petty cash account. So we have a deposit of 60 to increase the account, and then we show that we have made payments of $54. So payments of $54. And we have those categorized as common ones we used were postage expense and delivery expense. And then we had sundry, is just kind of means extra, miscellaneous, miscellaneous cleaning, that sort of thing. So we don't do any postings from the auxiliary record. We are going to go in and do actual real journal entries here in a minute. That auxiliary record, again, is just kind of a summary. And then we're going to write a check to replenish the petty cash fund. So to replenish the petty cash fund, we're going to debit postage expense for 15, debit delivery expense for 21, debit cleaning expense, debit miscellaneous expense. Let me give you a word of caution about miscellaneous expense. Be careful what you put into miscellaneous expense. If you have too many things in, it's okay to have a miscellaneous every once in a while, but if we find that we're commonly putting something in miscellaneous, then maybe we need to create an account for that, right? So in this case, we put that first aid supplies in miscellaneous, and that's something we probably don't buy a lot of. But if we find that, we're frequently using the miscellaneous account, we need to examine that and create some real accounts. So those debits totaled $54, and then we're going to credit cash to write a check for $54 to put back into the petty cash fund. So here we can see that we've reconciled that out. So we've got our ending balance of $6 and then we've replenished it. So now we're back up to our new balance of 60. Now, a change fund or a change drawer would be used for, again, if you're running a store, for example, where you're kind of keeping track of change. So we would have a change fund that we would debit, let's say for, in this example, $120, and then we credit cash to show this is how much money we're put in our change drawer or change fund. Now, it happens that we make mistakes, especially when we're making change and giving change, and we may not total out exactly right. We want to be careful and we want our employees to be careful, but certainly they're human and they will make mistakes every once in a while. So we may have an overage or a shortage. So the cash short and over account is a miscellaneous account that we're going to use to record these overages and underages, shortages. So the shortage would be considered a miscellaneous expense, and the overage would be considered other income. So here we're told on December 5th, we have a pizza shop that rang up sales of $560, but we only wound up with $530 in cash. So we have a shortage of $30. So we'll debit cash for $530. We'll debit that cash short over for $30, and then we'll credit sales for $560. Notice we're going to go ahead and record sales at the total amount, like this is what we sold, even though that's not how much we got in cash because of, some mistakes. It's okay. So we've got a debit to cash short over and a debit to cash, and then a credit to sales for the full amount. Now here the next day we had sales of 560, but we had 610 in cash. So we didn't give somebody the right amount of change. Oops. So here I'm going to debit cash for the 610. I'm going to still credit sales for the 560, and now I'm going to credit cash short over for 50 to show, oh, this is the extra money that I have that I really shouldn't have. So here, let's look at another example. We established a petty cash fund of $200. On November 30th, the petty cash box had $160 in vouchers and $32 in cash in it. So notice that the petty cash vouchers and cash only add up to $192. But we said that there should be $200. So somebody made a mistake somewhere. Either they forgot to record a voucher or they accidentally gave out too much money or something, because we're $8 short in our petty cash fund. So here when we do our entry, we're going to debit our various expenses for the 160, which was what the vouchers totaled. So postage and supplies, we're going to debit that cash short over for the $8 that's missing, and then we'll credit cash for 168 to replenish the petty cash fund and bring it back up to its $200 balance. So again, here's our journal entry there. So at the end of the period, when we're doing those adjusting entries, like we learned in an earlier chapter, we also need to close out the cash short over account. So if the cash short over account has a debit expense, then we would close that out as a debit balance, and we would close that out to a miscellaneous expense account. So we debit miscellaneous expense, credit the cash short over to zero it out. If the cash short over has a credit balance, then we would close that out to an other income account. So we would debit the cash short over, credit other income to close that out.